Is Japan's glory days fading, or is it experiencing a recovery? Once a titan of industry and innovation, Japan now finds itself at a crossroads. Amidst economic stagnation, demographic challenges, and geopolitical tensions, the question looms: can Japan reclaim its former glory? While some remain optimistic about its potential for recovery, others remain skeptic, citing deep rooted structural issues and obstacles. In this video, we'd explore Japan's journey from powerhouse to underdog and the uncertain path ahead in its quest for resurgence. Why has Japan fallen, and would it rise again? By way of background, Japan's post-World War II economic growth was nothing short of miraculous given the amount of rebuilding required. The distinguishing characteristics of the Japanese economy during the economic miracle years included the cooperation of manufacturers, suppliers, distributors, and banks in close-knit groups called keiretsu, the powerful enterprise unions, good relations with government bureaucrats, and the guarantee of lifetime employment in big corporations and highly unionized blue-collar factories. However, some scholars argue that Japan's post-war growth spurt would not have been possible without Japan's alliance with the United States. This is because the United States literally absorbed Japanese exports, tolerated controversial Japanese trade practices, subsidized the Japanese economy, and transferred technology to Japanese firms, thereby magnifying the effectiveness of Japanese trade policy. So it is a fact that state-assisted capitalism, a surplus of well-educated workers, and a stable political situation with low military costs were just a few of the factors that helped the country recover quickly and grow rapidly into the world's second largest economy. Interestingly, the growth peaked on December 29, 1989, when the Nikkei 225 closed at 38,195, its all-time high. Unfortunately, things changed dramatically when the Bank of Japan raised interest rates in the early 1990s. Not long after that, twin equity and real estate bubbles burst and threw the country into a deep recession. So the BOJ tried to stimulate the economy by implementing easy monetary policy featuring low or zero interest rates, but an extended deflationary environment took hold, and the spiral of falling wages, appreciating yen, and surging government debt made it difficult to normalize policy. Additionally, Japan faced a number of hurdles in the following years, such as increased global competition, economic disasters, and the demographic challenges presented by having the world's oldest population with a birth rate of only 1.3. These have contributed to muted growth in what some would call a lost 30 years. 2020 came, and there were still numerous challenges. This time, the price of exports relative to the price of imports have worsened for 9 consecutive quarters. In fact, national accounts showed import prices rose by 60.7%, while export prices only rose by 27.7% during the same period. The reason for this was twofold. Firstly, there was a rise in commodity prices due to both the recovery of the global economy from the COVID-19 pandemic and the supply shock stemming from Russia's invasion of Ukraine. The other reason was the depreciation of the yen that resulted from the United States and Europe pursuing monetary tightening policies while Japan maintained a loose monetary policy. Also, the worsening terms of trade have affected Japan's national income. The loss of income was equivalent to 4.6% of real gross national income. At the same time, part of the trading loss was offset by the increase in net income received from abroad. The rise in interest rates abroad and the depreciation of the yen helped to push up real GIN by 3% during that period. But the burden of trading loss has weighed heavily on the Japanese economy, whose recovery from the COVID-19 pandemic has been slow compared to other economies. Furthermore, private consumption has been greatly discouraged by the rise in inflation, which saw the headline Consumer Price Index peak at 4.3% in January 2023. The level of private consumption achieved in the first quarter of 2020 did not recover until the first quarter of 2023. Business investment has also remained low due to uncertainties surrounding future growth prospects. And as a result of weak democratic demand, the core consumer price index, which excludes food and energy, stayed below 2% during the period. But even when the economy faced a headline inflation rate that exceeded 4%, the government did not amend its policies. So far, the Japanese government has been trying to salvage the situation. In fact, subsidies were provided to wholesale oil companies from January 2022 and to electricity and city gas companies from January 2023 so that they could cap their retail prices. While the policies to counter price increases could have been more targeted and consistent with efforts to reduce energy consumption and greenhouse gas emissions, price cap policies were chosen as emergency measures. To deal with the depreciation of the yen, the government also intervened in the foreign exchange market to support the yen. Interestingly, the interventions that took place in late 2022 were the first interventions to support the yen since June 1998. But while these costly actions were taken to shield Japan from external shocks, it was not until commodity prices finally peaked in the third quarter of 2022 that the terms of trade gradually started to improve. Accumulated trade gains from then up until the second quarter of 2023 amounted to 1.7% of real gross national income as of the third quarter of 2022. This also led the headline inflation rate to slow down to 3.2% in August 2023. Although the short-term situation seems to have improved, yet a few concerns remain. In May 2023, anticipation that Japan's monetary policy will continue to diverge from that of other economies caused the yen to start depreciating again, which has offset some of the positive impact of the fall in commodity prices. In spite of all these, the real question is there still hope for Japan? Well, finally, after more than 30 years, Japan is once again forcing itself upon the attention of international investors. In a fragile world, the world's third largest economy is generating solid economic growth and strong corporate profits. Deflation appears to have been vanquished, and the stock market reached a 33-year high in late 2023, surpassing the peak reached during the 1980s bubble. But of course, a degree of skepticism remains, and rightly so. This is because previous efforts at renewal have fizzled out, and so have positive returns and investor enthusiasm. Yet some people still argue that these times are different and that a new Japan is emerging. There are a few reasons for this optimism. The most prominent is the new focus of the government on the labor market and energy transition. In the labor market, the new development of encouraging older employees and women into the job market and attacking an entrenched seniority-based pay and promotion system has lifted the workforce participation rate from those aged 15 to 64 to 81.6% in 2023 alone, the highest it has ever been. Meanwhile, average monthly wage growth has been soaring and remains healthily positive, a major factor in the country's escape from years of falling prices. This is underpinned by a ratio of 1.3 job openings per applicant. So ironically, Japan's challenging demographics, which has been the cause of much national hand-wringing, are a positive factor in re-embedding inflation into the economy. Also, the government is trying to tackle the energy transition. Its green transformation policy promises 150 trillion yen, which is about $100 trillion over 10 years in public and private money to accelerate national efforts at decarbonization. While this program appears much smaller than the U.S. Inflation Reduction Act or Europe's Repower EU initiative, Japan is also generously subsidizing moves to enhance energy security and to build green supply chains in the country. Per capita, therefore, Japan's green transformation stimulus is more significant than the headline figure suggests. Moreover, the country is a leader in developing advanced clean tech, focusing on hydrogen and ammonia as both fuels and storage vectors, as well as carbon capture. Another reason some people are optimistic about Japan's recovery is its latest move to encourage investment. Recently, the government has modified its tax-free savings scheme to encourage individuals to invest more of their significant cash savings in equities. It has also launched efforts to attract international asset managers and to digitalize the country's notoriously paper-based bureaucracy. Interestingly, bottom-up reforms are also accelerating. The Corporate Governance Code, which kicked off almost a decade ago, has been reinforced by recent regulations from the Japan Stock Exchange, which requires publicly listed companies to increase their price book value above 1 or be demoted to a lower tier of the stock market. This has triggered a wave of share buybacks, as managements have unlocked cash cushions built up during the pandemic, with 2022 setting a record at 9.4 trillion yen. Finally, companies are also increasing wages consistently in an effort to attract and retain workers and reallocate capital and staff away from less profitable business units. Japan is not about to see the volume of spin-offs and sales to private equity common in the West, partly for cultural reasons, but also because changing employment contracts and laying off staff is so complex and expensive. Meanwhile, younger people are already making different choices. For example, the dream job for graduates of Todai, the top-ranked Tokyo University, is no longer a government ministry or joining a large multinational. Instead, they are choosing to start their own companies based on their university research, becoming software engineers, working in biotechnology, or for environmental companies. It is hard to overestimate this shift in a country that is as traditional and socially conservative as Japan. Another amazing thing that is happening in Japan that predicts its return to glory is its newfound appetite for risk. A lot of experts have noted that the appetite for risk that drove national economic development a generation ago is returning. This can be seen in the entrepreneurial drive of younger workers, in the growth in private investment and corporate productivity, and in the gradual return of consumer confidence. According to the same experts, wage growth is fundamental in increasing consumer confidence, and it is enabling people to cope with higher prices. Because as long as quality is improving, Japanese people don't mind paying a bit more. Japan has had its share of a roller coaster experience, but do you think it can retain a dignified position in the global economy? If you enjoyed this video, do click the like button. Also, do subscribe to this channel if you haven't. Where money matters, we'll see you on the next one.